I think people are going to understand just exactly how severe counterparty risk really is. And then the infusion of interest in a matter of one day would overwhelm this market. I mean, that's how fast it happens, which sends shockwaves through the entire globe on the ramifications of buying precious metals. And it's not like you're going to start to see all these sovereign mints from around the world expedite an overnight metal to the United States. No, their citizens are going to face the same problems we are. The dollar is the foundation of every currency on the planet as the world reserve currency. If the dollar is in trouble, it's going to bring down with it a lot of other countries and economies, which will only wake those people up too.
This is Kaiser Johnson, and here's the weekly special for November 13th through 20th, 2023, while supplies last. XF $20 Gold Liberties at $1.65 over melt, and 2023 Silver Philharmonics at $3.40 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals, and he joins us for this weekly market update. Today is Tuesday, November 14th, 2023. Andy, thanks for coming back on Liberty and Finance.
Always good to be here, Dunn, again. Thanks for having me, buddy.
I wanted to take a few moments right at the beginning of this episode to talk about some end-of-year planning items for people who are trying to make moves. I've had quite a few clients in the past week or two who are trying to look at their pieces on the chessboard of their life and make sure not only that they're making prudent and strategic moves, but given the hostile environment financially that we find ourselves in the world, with banking fragility and the dollar being driven down to nothing in value, et cetera, but also wanting to be cognizant of things that might be happening at the end of the year specifically, and that if they would wait till January, it'd be too late to make some of these moves. So one of those is a question on the tax implications of taking a distribution in kind or in cash from a precious metals IRA. And I'll first give a disclaimer, as we always do, that we are not tax advisors and we are not personal financial planners, but we have been around this barn for a while, so we've seen some things. And one of the things was people asking if they were to take metal as a distribution from an IRA, which has never been taxed because it was bought inside the IRA with pre-tax money, that's earnings that have never been taxed. Will they have immediate tax due on the day that they take that distribution, or can they wait and pay that tax when they settle up with their IRS in April 15th for the current tax year? So I helped clarify to the one client that certainly taking a distribution from a traditional IRA, not a Roth IRA, but a traditional IRA, does serve as a taxable event, because those funds, that value has never been taxed by the taxman. You can't avoid that as far as I know. But after that initial taxable event, you do usually have until April 15th to settle up for that. So if they anticipate that they're going to be getting a bonus from their employer at the end of the year, or some other form of cash that they could pay the taxes with, they don't necessarily have to immediately liquidate a portion of those metals when the day that they take the distribution. Any further thoughts that you can add to that question on the taxable, how to handle the taxes that are due on a distribution from a traditional IRA if it's a precious metals IRA?
I guess, look, like you said, this is pre-tax money. And if we're talking a traditional IRA, obviously a Roth is after-tax money, and all the gain is non-taxable, which is great. But in a traditional IRA, this is money that was invested for you with the privilege of not paying taxes at the time of it going into your IRA investment portfolio. The one and only thing that I think people need to keep in mind about taking distributions some people are forced into taking a required minimum distribution one. I think they bumped that up to 72, if I'm not mistaken, from 70 and a half. But some people just take a look at the world around them and say, well, geez, the current debt right now is 33.6 trillion. Forget about the unfunded liabilities. And that's up from the $31.4 trillion debt ceiling in January. And here we are again at another debt ceiling debacle coming up here in the next several days, where they're going to have to raise the debt ceiling again in order to continue to finance. If not, they'll default that's saying it's a Ponzi scheme. And they should say we're going to start to cut entitlements and stuff and tighten our belt rather than have to keep money coming in the front door to pay it out the back. That's pretty much a definition of a Ponzi scheme. But I digress. But look, a lot of people are saying, geez, you take a look at what we owe and how fast the debt is climbing. That works out to $1.3 billion per day in interest payments, or $54.2 million per hour in interest payments. Geez, I bet taxes are going to go higher. And in this environment, gold ought to go higher too. So look, here's the thing. Some people say, geez, in this environment, I should take my metal now. I'll take a much larger distribution. Maybe I'll take a liquidation and I'll pay my taxes. No way around that. And because gold is probably going to go higher, silver is probably going to go higher, and taxes will probably go higher. Great. All of that I would agree with. The one thing that people need to keep in mind when they're making distributions or liquidations out of an IRA is other income that they have. Because if you're receiving other income and you're at a lower tax rate basis, a tax level, if you take a large distribution out of an IRA, it will bump you up. There's a chance it could bump you up into a higher tax bracket, meaning you'll owe higher taxes on everything. So that's pretty much, to me, the only issue when it comes to the taxes of an IRA. Uncle's going to get his piece one way or the other, pay me now, pay me later, but either way, you're going to pay. And I think it is prudent to give consideration to that fact. The numbers, our indebtedness is accelerating at such a pace. In that environment, we would expect, I would be lying if I didn't expect gold will be much higher this time next year, and much higher than it will be it will be much higher 2 years than it will be in 1 year, and on and on and on. Maybe it isn't such a bad idea to take a larger distribution than you otherwise would have done as a result of the taxation and as a result of the escalation in what it is that will be taxed, that being your gold and silver holdings. So to me, that's the only thing that we need to think about is, will this bump me up into a higher tax bracket, making all of my tax obligations that much uglier? So other than that, no, it's pretty straightforward. And that's kind of the simplistic beauty of the precious metals IRA, with the ability to take possession in kind. And I think that's a huge deal. Look, if you believe enough to have it be the vehicle of your IRA, the ability to take possession of it really is kind of the bonus.
Yep. And so I'm following your logic there that if you anticipate a rising gold price environment, then that distribution you take today would be a lower current value, therefore lower tax bill than if you say wait 1 to 2 years, take it out when gold is much higher. And
taxes are probably.
And taxes may be also higher. So you multiply higher gold price, in other words, a higher taxable event times a higher tax, current tax rate may end up in much higher taxes later. But if you want to fine tune that, maybe if somebody says, well, I'm already over the threshold of my current tax rate, but I have some headroom there before I bump into the next tax rate, so I'll at least take that amount, and it won't bump my tax bracket. It won't bump me into a new tax bracket.
Right. And that's the thing to think about, because that could be a substantial increase. That's the whole premise of an IRA at the end, is that you take little pieces rather than it all at once to minimize your tax burden all at once and keep you in a lower tax bracket, because presumably when we're retired and we don't have much income coming in, we should be at the bottom tax bracket, with Social Security and whatnot. With no income, your small distributions shouldn't affect that adversely. But, you take a 6 or a mid 6 figure, even more, a larger distribution, you have issues now. You're going to be bumped up to a higher tax bracket. So that's pretty much the only thing that I would tell people. And in an environment where we see the economy slowing down, look, I see an environment ultimately of stagflation, maybe hyperstagflation, which is little or no economic growth or a slowing economy characterized with rising prices and rising taxation, because they have to get the funds somehow. So they'll try and tax as much as they can. And in an environment, if I'm right, where the economy is slowing and prices are rising, gold and silver go higher, your taxes go higher, the economy is slowing, the government needs that revenue. They're going to squeeze as much as they can out of taxation. Certainly, the IRAs are a prime spot to do that. yeah, I think that these are things we should all think about, the what ifs in the future, and then the ramifications of speeding up the clock, if you will. So a very good question, one that's straightforward yet is nuanced, and you should think about that if you're in this position right now. Hey, would it behoove me to take a larger distribution now because I think gold's going to be X next year, and if that's the case, my taxes will be higher. And you know what? I wouldn't be surprised if taxes go higher. And well, geez, maybe now is the time to do it. So, yeah, that those are all relevant talking points and things that people should consider with their accountant, talk it over, and find out what's the best plan for you. Sometimes those considerations throw them out the window just to have physical possession of it, remove counterparty risk. So there are a lot of thoughts that go into that, but it's a very, very good question, and one that I think, while straightforward on the surface, much more nuanced underneath.
Yeah, that last point is one that I had glossed over earlier, and that is the value of personal possession. Because as long as your metals are inside an IRA, you have at least two forms of counterparty risk and then one form of privacy loss. The two forms of counterparty risk are you're trusting the custodian company and the vault company that you'll be able to get your metals eventually, someday. But also there's that privacy aspect that everything that happens within an IRA has to be reported to the IRS by the custodian. So there isn't that same privacy that you have if you're holding metals in your own possession and doing with them as you please.
Well, let's not forget, you're right. And after the great financial crisis, there was a bill in '09 that made it to the House floor. It didn't get any further than that. But the bill basically said, look, and this will show you how fast our national debt has grown. And in '09, there was 17 trillion in IRAs in the U.S., give or take, and 17 trillion in debt in the IRS, give or take. Well, look what's happened since '09. That 17 trillion has doubled. And the proposal was, look, if this ever happens again, if we see a problem where we see the markets turning upside down and the bond market collapsing and interest rates spiking, sounds familiar, doesn't it? I think see something like that, maybe much worse than what we see now. And the premise was, hey, we confiscate people's IRAs and we take the proceeds and put them into an annuity of sorts that is backed wholly by U.S. Treasuries. Stabilize the market, stabilize the fall of the dollar, stabilize the cascading higher of interest rates and the falling of Treasuries, and we make everyone out of their patriotic responsibility to do this. And it's a guaranteed return by the U.S. government, paid for, you get paid your return in Treasuries. But it didn't get anywhere. But the fact that it was proposed means, desperate governments do desperate things, that they're aware it's there. And hey, it would be very enticing and I think almost impossible for them to notice because, you are a captured audience inside the IRA vehicle. And if you actually look at the verbiage of an IRA, if I'm not mistaken, done again, you are not the owner of the IRA, the custodian is. You're the beneficiary of all of the income and of the assets. So, it's one of these situations. And there's this new book that I just downloaded and I started reading, and it's quite terrifying right from the get-go, by David Rogers Webb, The Great Taking. And I know you've talked about it. And geez, that's more or less what the whole premise of the book is that, removal of counterparty risk and the definition of ownership and of custodial ownership and all of these things that, look, in a perfect world, an IRA is great and we don't worry about having confiscation of assets even enter into the picture. But this isn't the perfect world anymore. I think there are a lot of things that people need to consider. So, speeding up the liquidation or the distribution process is not a bad idea to me. And, we live in a world of uncertainty. So to remove counterparty risk, and as you said, there's 3 points there, the depository, the custodian, and the government. Yeah, sure. These are things that I think people should think about. And if you're not thinking about it, then, maybe you're a little too comfortable. You ought to start thinking about it. Download that book, The Great Taking. It's free. It's thegreattaking.com, and it'll blow your mind. And there's been some really impressive YouTube videos on it lately that have kind of frightened me a little bit. I almost wish I never stumbled across it.
Yeah, we'll put a link to that book. It's a free download in the description of this video. And if we could turn our attention to the bullion market briefly before we look at sort of world affairs and trends, as you often do, just checking with you to see if we have any updates, as you sometimes do, from the U.S. Mint on their plans to change over to the new year of mintage production and how the supply is holding out of existing 2023 coins prior to that changeover.
Better than I thought. Typically by Thanksgiving, the 2023s or the current year issue disappears. There's decent availability right now. They are striking 2024s. I could offer them for sale, but the contango, which is basically the cost you have to pay to go out into the future, the futures contracts to secure it into January, adds 20, 30 cents to the cost of the coin. It doesn't make sense to do it. So we're waiting to offer the pre-sale for the 2024s. But they are producing them. So it's business as usual as far as we know right now. 2023s are still available. And again, it will go down, honestly, as one of the biggest mysteries for me in a very long time, maybe ever, how the availability is what it is industry-wide. I am completely and totally shocked by it. I guess maybe I just have a feeling that more people should understand or see what we see. And maybe that's just the issue, is that most people haven't really woken up to the problems that are coming. And that's one of the things that we'll talk about. I mean, the rest of the world has. I mean, look, in Japan, gold's up 50% year over year. This year, it's up 50% in Japanese yen. It's up tenfold in Turkish lira. It's up fivefold in Argentine pesos. Argentina just joined the BRICS. Turkey is going to join the BRICS. They were just told that they can't join the European Union anytime soon. So they said, fine. And they're doing more and more and more business with the BRICS nations. And rumor is Japan is too. Look, what's happening, the bottom line here is that the inordinate strength of the dollar is masking gold and silver's utility. The rest of the world understands it. The people in this country don't yet. And as a result of this really strong dollar that has brought inflation down, even if we forget about the fact that they don't tell us, that they're not measuring in the core measurement, food and energy and housing and all of this stuff, which is just a joke. It's the strength of the dollar that has brought inflation down. It is the strength of the dollar, unjustified and inordinate strength, that is masking the reality of what gold and silver are. You have gold at all-time highs right now against the pound, the Canadian dollar, the Australian dollar, the yen, the yuan. I mean, go on and on and on. Most of the countries around the globe are seeing all-time highs in gold. It is doing what it is supposed to do. It is the fact that the dollar, once again, use the stupid analogy of being the cleanest dirty shirt in the laundry hamper. It's true until it's not. And that's the little by little by little by little that we've talked about forever, that we'll talk a little bit more about here today. But the availability is good. The pricing is good. And it's better than anywhere else in the world because of the strength of our dollar. And if you think the dollar will maintain this strength, then maybe there'll be better prices ahead. If you think that ultimately the dollar is in trouble, and we start to understand what the rest of the world already does, that in a falling currency, the price of gold will go much higher. It's not the price of gold going higher in yen or euro or pounds or yuan. It's the fact that those currencies are falling in relation to the benchmark, the dollar, in which gold is valued again. So I don't think we've seen anything yet done again. And I know it's hard for people to grasp this sometimes, but the rest of the world gets it. People in this country have yet to get it. And when the people in this country get it, and maybe it's a bank bail-in, as we've talked about, or some event that wakes people up like that, that's how fast the supply. And you know this to be true. I'm not sensationalizing. We've been working together long enough. You've seen it yourself, to where in a blink of an eye, it goes from, yeah, it's plenty available to it's not available. And that's the kind of thing that I see in my mind's eye. We saw glimpses of that over the last few years, but I think the setup, the backdrop for what could come next would very quickly change the availability, the premium, all of that stuff, even the underlying price. We're not there yet. And this is a gift if you believe there is uncertainty and perhaps trouble ahead with the dollar and the markets and all the things that all the guests on your show so eloquently talk about. Then you have a gift that everyone else in the world isn't getting, because they're paying all-time highs and we're not there yet.
Well, I think part of the mystery of you're saying one of your greatest life mysteries here is why is it that more people aren't seeing what you're seeing? And I think part of that is because if you think about your role as a CEO, you are at the helm. You're looking ahead strategically. I remember taking courses from Stephen Covey, and he talks about that the difference between management and leadership. Leadership has to be looking ahead strategically, and so sometimes it even trips you up because you're so thinking in advance. You think it's the next year. You actually think, oh, it's 2024 already because all of my plans are being set, all of my contracts are being laid out there. I'm already thinking ahead of what's happening in 2024. That kind of thing is something that happens to leaders who are looking ahead, and you're tapped into leading sources of information. You're making intuitive judgments based on experience on those leading indicators that you're watching. The ordinary person is being just inundated with voices that are telling them, everything's fine, because there's some real conflict of interest on the part of financial planners. We've talked about that. Some of the mainstream media, we've talked about that in mainstream financial channels, etc. Why and the government for sure. That's what John Williams from shadowstats.com is on talking to us about those things, about why we have these voices talking soothingly and calmingly and reassuringly to people about nothing to see here, folks. Just like when Jamie Dimon sold for the first time ever in history 10% of his JP Morgan stock 2 weeks ago, and said, nothing doesn't mean anything, just means I'm just rebalancing my portfolio. I was kind of overweight in one area and that kind of thing.
140 million. Well, God bless you for saying that, because, it is a mystery, and it makes a lot of sense what you just said. In fact, I've always said the hardest part of running Miles Franklin, my favorite part is this, talking to people like you and to my clients. But it's like swimming in a crowded pool. You have to pull your head up once in a while to see where you are, and it's hard to do, to balance everything and to see where you're going. And I think that is true. And if I have a curse, it is that I see things in advance, and I'm looking forward. I mean, I'm always looking forward. I was always I've loved to ski since I was 4 years old, and it's something I think I'm pretty good at. I mean, I've never met a black diamond run I don't want to ski. But the way that you become a good skier is to not look at the tips of your skis. You've got to be looking 7, 8, 10, 15 feet ahead. You want to ski moguls? If you ski moguls and look at right in front of you, the tips of your skis, you're going to wipe out and really hurt yourself. You have to be looking 2, 3, 4 moguls ahead and plot your path before it's on top of you. And that's how you run a successful business as well. If you don't roll with the changes, you get rolled by the changes. And that's why I say the things that I do about supply and about the things that I see coming, because you can't run a business in the today. You have to be looking down the road. Sure, everything is about living in the moment. But if you want to run a business that is successful, if you are not thinking about the challenges that are coming at you, whether it be technology or whether it be in terms of taxation or legislation or regulation or just anything that would go into running a business, if you're not forward thinking, then you're going to end up having a short career. And that's the way that I look at the market too. And I do believe all of the supply issues center around the fact that, go back to how many times we've said what Rick Rule says, that 0.5% allocation from Joe and Jane six-pack to the Harvard Endowment Fund is all you need to know. Now, maybe that's expanded a little bit, but I don't see a place to put my money outside of this in an environment where counterparty risk, to me, will be the nastiest phrase that people can think of down the road. And when you can remove counterparty risk, as we were saying just a few minutes ago, I think that is not only is it an eloquent thought to me in terms of a way to solve many of the problems, but it's also bigger than that, because I think people are going to understand just exactly how severe counterparty risk really is. And then the infusion of interest in a matter of one day would overwhelm this market. I mean, it would. In one day, it would all be gone. We've talked about this before. So let's say there's 10 companies with 50 to 70 million in inventory in this industry, and that would be generous. So $1 billion into this industry, and it's gone. I mean, that's how fast it happens, which sends shockwaves through the entire globe on the ramifications of buying precious metals. And it's not like you're going to start to see all these sovereign mints from around the world expedite and overnight metal to the United States. No, their citizens are going to face the same problems we are. The dollar is the foundation of every currency on the planet as the world reserve currency. If the dollar is in trouble, it's going to bring down with it a lot of other countries and economies, which will only wake those people up too. This is a situation where, it's like a lot of people will say, yeah, I knew that was coming. And the fact that I didn't react upon it as I should have preemptively before it became so obvious will be a big mistake, and they will lament that for a long time. That's the kind of stuff I see clearly. But to say that to people just is, and to say it over and over and over again, it gets old. I understand that. I appreciate that. I'm not too married to this mantra to not understand that gets old sometimes, but I still believe it. I believe it in my soul. I couldn't get up in front of the world like this, 10 times a week. And I do at least that many podcasts every week. I couldn't do it if I felt I'd throw up. How can I say this stuff if I don't believe it? I believe it. And I'm scared, literally, as a father, as a businessman, as an American. I think we have challenges coming. And I look at this as the greatest subsidy that we could ever be given, a gift. And yet when I say that, it's, he's talking his book. I almost feel that in the back of my mind. You're talking your book. No, I'm not. I guess everyone is jaded. And even when you try to say you're not jaded, you can see how people would think you are, or that it is. The whole thing is just, I don't know. All I can tell you, Dunnigan, is there will come a time where people will wish that they had availability and premiums at this level. And we're not there yet, and I don't know when it's coming. But I will tell you that when it comes, it'll happen in the blink of an eye. It's kind of like the Titanic. They didn't have enough life rafts because it was not possible for the boat to sink until they hit the iceberg. And then they had very little time to prepare, and lots of people perished. Now, I'm not going to say, I'm just trying to draw a bigger picture here. A lot of people think that the dollar could never lose its supremacy. A lot of people think that none of this stuff can ever happen, and they're not preparing when they have right now the best environment that we've seen in years to prepare. And because of that, they say, well, see, if the world was so awful, then why is it available and the price is low? I get it, it makes sense. But there's a lot going on behind the scenes that I think will render that argument wrong before too long.
And in that area, again, you're looking broadly and looking for trends that are happening geopolitically and in the economies of the world, et cetera. What are you seeing in the past week that you want to give our viewers an update on, and what's happening regarding the health of the dollar, the balance of trade, et cetera, that are going to be affecting us going forward?
Yeah, lots of stuff. And it's interesting because a lot of the things that I'll mention, some of them, just hearing it in and of themselves, okay, that's I understand that, but you put everything together, this logarithmic decay, little by little by little by little by little by little by little, chipping away at the hegemony, chipping and chipping and chipping. People got really upset about the August meeting. Well, see, it was a nothing burger. They didn't come out with a unified currency. They're going to. We've been told over and over and over again. They're mentioning it again now, the Russian finance minister, that they are working at this feverishly. All of the finance ministers of the BRICS 11 now are working on this, and they'll come and bring together their findings at the August meeting. We've talked about how they are going to use local settlement, and they are. One thing that was just released that you don't hear the mainstream talking about is something called BRICS Pay. And it's a new financial settlement platform. Just came out October 25th, 2023. And it's a blockchain-based payment system. It's a distributed ledger. It's designed so that any of the BRICS member currencies can be used in settlement. And then the main goal is to enable trade between the BRICS countries and bypassing the U.S. SWIFT system or the European or the Euro and the United States systems altogether, financial systems in particular, SWIFT. And all of these countries are working together. Look, the BRICS say, look, you already got two of our members have been disconnected from SWIFT, Russia and Iran, and their assets frozen. And you see threats all over the place to do it to China if they were to invade Taiwan and this and that. This has been the the this has been those events have created greater urgency in developing this alternative system. And that the political sanctioning is something that the whole world is rallying against. This whole BRICS world is rallying against. And so the BRICS pay effectively replaces SWIFT, or at least the functionality of SWIFT right now. And you have it all over the place. The State Bank of India launched BRICS Pay mobile app for cross-border transactions. Russia has done the same thing, a BRICS Pay app to cross-border transactions. They're big banks. The ICBC Bank of China has done the exact same thing. So they're all integrating it, but it's not just restricted to the BRICS. UK Standard & Chartered Bank has integrated BRICS Pay into its digital payment platform. So, the bottom line is that you have a new blockchain-based payment service that will play a role in promoting trade and integration amongst the BRICS countries that are growing in size, something I think people really need to think about. Little by little by little, right? Obviously, I'm sure, and you've talked at length about Moody's cutting the credit outlook of the U.S. government last Friday. I mean, look, that's something that needs to be thought about. I mean, at what point do we start to realize this is significant? Think about this. The country that is the world reserve currency, right? It's close to losing its AAA rating. Oh, really? How can that be? How can it be that the world reserve currency is close to losing its AAA rating? So when you talk about a dirty shirt in the laundry basket, yeah, that's exactly what it is. Couple other things. I was reading that Japan has an estimated 5,300 tons of gold, and they've roughly 10% of the global gold reserves. They've been accumulating it hand over fist, and what do you know? Gold is up 50% against the yen this year alone. Let's see, what else is important? Jamie Dimon, you mentioned, he's going to sell $141 million worth of stock in 2024. We keep hearing about the banks sitting on $650 billion in unrealized losses, and delinquency rates in subprime auto loans are going higher and higher and higher. And this is leading to statements that Xi Jinping says that, remember, changes of the world, of our times, and of historical significance are unfolding like never before. Yeah, it really is. They really are. And if you don't notice that, you're making a mistake. This is from the Dmitry Peskov. He's a spokesman for the Kremlin. He says the U.S. national debt has risen so high that Washington will no longer be able to print any more dollars to service it. He says, I read recently that the United States spends about $200 million an hour on servicing its debt. They will run out of paper soon, he said. I don't know if that number is right, because the Congressional Budget Office says $54.2 million per hour. He's saying $200 million. I'm sure the truth is somewhere in between. And as I mentioned, gold is up 50% against the yen. It's up tenfold against the lira and fivefold against the Argentine peso. Argentina just joined the BRICS. Turkey's going to join the BRICS. So these are all things that are happening faster and faster and faster. I guess one more thing really to announce is that the Bank of Russia recently announced it will create a joint payment system with the United Arab Emirates using the digital ruble and for fast payments with them. So, all of these deals, these are two of the largest oil producers in the world, two of the largest commodity producers in the world, and they're now going to trade with one another in a digital ruble. All of these things, chipping, kind of like taking if you ever watched Escape from Alcatraz, they used a spoon, or it wasn't Escape from Alcatraz. I take that back. It was Shawshank Redemption. He used a spoon or whatever to dig a hole little by little and empty the gravel out in the courtyard. Little by little, he chipped away. And after a few years of chipping away under the poster of whoever it was, I forgot who it was, but she was pretty. He dug a hole and got out to escape the prison, little by little by little by little. And at first, it's impossible, could never happen. But over time, it happens. And that's kind of the idea behind logarithmic decay. And that's the idea behind the BRICS. They're methodical, they're plotted, they're well thought out, and you can see the infrastructure is being put into place. So, every week there's something to talk about that supports this thesis. And it's becoming more and more concerning to me because the reality of it is becoming hard for me to escape. It once was an idea and a thought that I believed a lot in, and now I'm all but certain that ultimately, over time, this will be our fate. So that's where I am. That's all I got for you today, Dunnigan. I wish it was much more rosy and happy, but look, the bottom line is there are no coincidences in this world at this level, and these things are not coincidental. They're all part of a bigger puzzle.
Well, Andy, we're always grateful for your presence here, and I didn't want to let you go before you get a chance to inform people what the weekly special is.
Yes. Silver Philharmonics 2023 at $3.40 over the price of silver. Platinum Philharmonics at $105 over the price of platinum. And the $20 Liberty XF grade. These are circulated but very nice condition, pre-1907 and earlier $20 gold pieces. Maybe my favorite gold coin ever, the $20 Liberty. And those are $165 over spot gold. Look, there's, like I said, every week lately for the past few months, everything's on sale. So whatever you're buying, just use these pullbacks. Well, today is not a pullback. It went way up today, but use this environment, this counterintuitive environment where prices should be a whole heck of a lot higher based upon the world we find ourselves living in. And just understand that the biggest money in the world is doing just that. They're using these suppressed prices and the rhetoric that is anti-gold and pro, normalcy bias to do just that. And so don't do what the world is saying, do what the biggest and most sophisticated money is doing. And that is slowly de-dollarizing. And as methodical as you can be, do it. And that would be my advice to anyone right now in this environment.
Well, Andy, as always, thank you for being here. Folks, look again in the description of this video for that link to the free ebook. That's The Great Taking. It's very important to understand what that's all about because people have already been concerned about the fragility of the banking system. Tomorrow we'll be talking with Alistair McLeod, former bank director, about that, about how the banks are holding together with bubblegum and baling wire, but this is also how brokerage is and everything, all the stocks you think you own, all the balances you think you have in the stock brokerage accounts, whether those are actually your legal title or not. There's a hint there, they're probably not. So anyway, thank you, Andy, for being here with us. We look forward to seeing you again soon, and always thank you for joining us on Liberty and Finance.
One last thing, say hi to, I always tell you, he's kind of a hero of mine, as goofy as that sounds. I think he might be one of the brightest minds in the world, and say hi to him for me. Tell him he has my utmost respect and admiration.
Absolutely. Thank you so much, Andy, and take care, everyone. Thank you all for watching. Make sure you share this widely if you have any friends, family members, neighbors, coworkers that you think might benefit from this. This is how we help others, is by sharing this important information that they're not going to be hearing from mainstream sources. And Andy, thanks for joining us.
Thank you, Dunnigan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.